it is 12 o'clock. Let's go ahead and get started with the 2022 season planning and client tax update. This is only for clients, but this is going to be recorded and disseminated afterwards. So if you got to jump off, definitely feel free. But let's go ahead and get right to it. So the agenda for today, first thing we're going to talk about is just some review of the key dates and other important information. Then we're going to actually go into the actual tax law update. So how the tax law changes may impact your 2021 filing. And then lastly, we're going to go over some operational changes, just, operations, packages, pricing, what we have going on here in the office. We'll do that last. Decided to switch it up a little bit this year and go over tax data first, in case you have to get off and go and do something. Once again, we have about an hour. So I think the presentation itself will probably be maybe about 45 minutes. If you have any questions, so we're gonna keep all the cameras off, keep all the lines muted. If you have any questions, just hover your mouse up or down, depending on where you're at, and you will have a little menu bar that will come down. It will say chat. Just type your questions into the chat and I will make sure that I answer them before we get out of here. So a little bit of Q&A at the end. All right, let's hop to it. So important filing season data. So the IRS has already opened up the filing season. That happened on Monday, January 24th for individual tax returns. Businesses are already available to be e-filed. That started, I believe, January the 7th. So this means that this tax season is going to be our typical 12 weeks of length. And we do not anticipate that the IRS is going to extend the deadline like they did in 2020 or 2021. In the industry, we actually joke that tax season has been going on since 2019 because we really haven't had any breaks. This means that the deadline to file your return or extend it, which does not extend the deadline to pay. So if you have a balance, you must pay your balance by the due date in order to not have any penalties or interest accrue for late payment. An extension allows you more time to file. So if you are a business, meaning an S Corp, partnership, or multi-member LLC, your deadline is March the 15th to either file or extend. You can extend out to September the 15th. And if you are an individual, individual or a C Corp, your deadline is Monday, April the 18th, and this is due to the Emancipation Day holiday. Washington, D.C. celebrates it, falling on the 15th, so they push it to the next available business day, which is that Monday. So everybody's got until the 18th to get those taxes either filed or extended. We are now in season hours, which means that the office is open from 9:30 a.m. until 7 p.m. Central Standard Time and 9 a.m. to 5 on Saturday. We are closed on Sunday. I wish I could turn the camera around because I'm the only one in the office today. Everybody decided they wanted to call off because of the snow. But hey, that's part of the job of running this joint. So I'm here with you guys. All right, and then due to the fact that we get extremely busy post March the 1st, everyone is encouraged to file early. And we do provide some great incentives to do so. I will discuss those towards the end. All right, let's get straight into the tax law changes. So for my businesses, most of your information is going to be on this, what you see on your screen right now. There were a few changes that were made, kind of reverting back. So when I say changes, every year, lawmakers, Congress, Senate, President, etc., may make certain changes. The last major round of changes were in 2018 under the Trump administration. And then the most recent set of changes happened in March, shortly after President Biden took office and issued the third round of stimulus payments. Well, a lot of things going in with the CARES Act came into play. And so there's been changes surrounding that. The big high level things, if you are a business, business losses for tax year 2021 returns are returning to the $500,000 limit because the CARES Act had temporarily repealed that limit for years 18, 19, and 20. So plain English, what this just simply means, if you had a loss in your business, specifically more so C Corps, of say, $1 million, you're only going to be allowed to deduct $500,000, and then it's going to be able to roll over to future years. speaking of losses, if you had a net operating loss, losses generated in 18, 19, and 20 that are being carried forward into 2021 are going to be reduced to 80% limit. So speaking plainly again, if you had a business that had a loss in 2019, had a $100,000 loss, you can carry that loss forward to offset taxable income, and that loss would not be at $100,000 on the return. It would be limited to 80,000. So once again, business net operating losses are going to be capped. If you were a business that received any paycheck protection program loans or PPP loans, if they have been forgiven, they do not count as taxable income. In addition, the federal law does allow you to deduct expenses that were paid with those loan funds and have them count on the tax return. So it's kind of a double dip. You don't have to include the income and you get to deduct the expenses. But all of these things were being done in an effort to try and help businesses as we continue to struggle during, COVID-19. So just realize that, PPP loans, you're not going to have to include that as income, and you can deduct the expenses. And then something that's new, many states have kind of enacted a pass-through entity tax that kind of works around the SALT caps. So what this means, state and local taxes have been capped on individual returns at approximately $10,000. So if you had, high property taxes and, state taxes coming out, you weren't able to deduct those. Well, some of this, if you have a business that has, it's either S Corp, multi-member LLC, or a partnership, some of the states have now allowed it so that the state taxes that are being paid on that corporation's return can now benefit you individually. Really won't go into this because it can get kind of complex, but the one thing to note is that for 2022, say you had an S Corp in the state of Illinois, there might be some changes that would have to be done or could be done at the state level to benefit you on your personal return. That's the main thing to kind of keep in mind with that. Let's go on to my retirees. So these are anybody who is retired under the Secure Act. The requirement for your required minimum distribution. So taking a required minimum distribution, or your RMD, from retirement plans and IRAs, the age changed. So prior to January 1st, 2020, the age after which RMDs were required to begin was 70 and a half. Well, the Secure Act, another act, that changed it to age 72. So basically, if you look at the next one, well, not that next point, but basically the year following the year you turn 72, you have to take the RMD, and it has to begin by April the 1st. So just something to keep in mind. If you were following the old rules, now you have up until 72. And if you turned 72 in 2021, then you have up until April 1st to take that RMD. Effective for tax years beginning after 2019, the age, the 70 and a half maximum age limitation for making deductible traditional IRA contributions no longer applies. So basically what this means is that anybody at any age can make a contribution to their IRA and potentially have it be deductible. There's a whole bunch of other rules surrounding deductibility with regards to, income limits, how much you earn, etc. But just know that you may be able to make a contribution and have it count. All right. So moving right along, now let's start getting into the considerations that will apply to everyone. So every year, the IRS increases or indexes certain amounts. So the standard deduction, you're allowed to either take the standard deduction or itemized deductions. Itemized deductions being medical expenses that exceed 7.5% of your adjusted gross income. It can be state and local property taxes. It can be state taxes taken out of your check. It can be mortgage interest, mortgage insurance premiums, charitable contributions, etc. When all of those things exceed the numbers that you see on your screen, you are taking the itemized deduction. If you don't exceed those amounts, then you simply take the standard. So for 2021, the deductions have been indexed. So if you are single, married, filing separately, the standard deduction is $12,550. Married, filing joint, qualifying widow or widower, you are allowed to take a standard of $25,100. And if you're filing as head of household, that deduction is $18,800. So you take whichever one is greater. If you have a dependent that earns income, they get a standard deduction that is either going to be the greater of $1,100 or their earned income plus $350. So, and it can go all the way up to the standard deduction. So basically, you can have a kid that earns $12,550, and they're not going to have a filing requirement. Capital gains. So short-term capital gains are still going to be taxed as ordinary income. However, since the tax brackets which apply to ordinary income have been changed, the short-term gains most likely could be taxed at a different rate than they were in the past. Long-term capital gains are taxed at either 0%, 15%, or 20%. So what this means is you had stock, you had cryptocurrency, you had something that you are selling, and you held it for more than a year. It's either going to be taxed at 0%, 50%, or 20% based off of your filing status and your income. So for example, you see if you were single, you made $30,000, your long-term capital gains rate is going to be 0. However, if you made $500,000 as single, your long-term capital gains rate is going to be 20%, okay? So just something to keep in mind for all of the people who have stock. Stimulus checks. So everybody knows that in March of 2021, people received stimulus checks of approximately $1,400 per person listed on their return. So if you were single, that was $1,400. If you were married, that was $2,800. If you had a child, then you got $1,400 for each additional child, a qualifying child. So let's say you were single, you got $1,400, and then you had a child. Well, technically you were supposed to get 2 stimulus payments, but you didn't get the other $1,400. Well, you will be able to get that remaining $1,400 in the form of what is known as the recovery rebate tax credit, okay? So the credit, the full amount that you got or received is going to be reduced by the amount that you did receive. So for example, we will reflect $2,800 on the tax return. You already received $1,400. You'll get the remaining $1,400 that you did not get. Taxpayers are going to receive letter 6475, your third economic impact payment, that needs to be provided to your tax preparer, or you need to provide the dollar amount. If you do not, the IRS is going to hang up your return for manual processing. We're pretty good. I literally had clients in the office yesterday, asked them about their stimulus payment. They said, oh, I only got $1,400. I said, nope, you should have got like $4,200, something like that, because there's 3 people on the return. And we had them call the bank, and the bank confirmed. So we're pretty good at that. But once again, you're going to want to know what your dollar amount that you got in stimulus, because it's got to be reconciled on the return. Okay. The economic impact payments or stimulus payments are not included in the taxpayer's gross income, but they do have to be reported. Okay. You can see on the right-hand side of the screen, my crazy looking face, and underneath that, on our YouTube channel, we do have we have a video that is about this particular credit. So if you wanted to see it, you can. Next, child tax credit. So anyone who had a child is going to be eligible, or could be eligible, up for receiving up to a $3,000 credit for children ages 6 to 17, and $3,600 for those that are below the age of 6. Now, during the year, parents could have elected to have received up to 50% of the credit, so either $1,500 per child or $1,800 per child, as an advance between July and December. So you see it's either, $300 or $250 a month that they had received. But once, just similar to the stimulus payments, those advanced child tax credit payments, or ACTC payments, have to be reconciled on the return. And once again, if you don't include the right amount and the IRS has to try and verify it, then they're going to manually have to process that return. And I'm sure you all have been watching the news and hearing about how the season is going to be rough. The IRS, so our year internally last year, that was our rough year. We lost a person to medical leave, and it was just really hard. We struggled a lot last year. We'll talk about changes that we have for this year to mitigate all of that, hopefully. But we were messed up. The IRS is now, they're getting it. There's something like 6 million unprocessed returns because during 2020, the IRS wasn't in facilities due to COVID. They started stockpiling all these returns that were being mailed in trailers. They're still at facilities unprocessed. So you don't want the IRS to have to do anything related to your return. You want them to process it and move it. So if they have to manually review it, it's going to be held up. Just make sure that, we've got any numbers that we need. Taxpayers are going to get letter 6419, 2021 advanced CTC. Should have received it in late December. And this letter is going to include the totals of any advanced child tax credit payments, as well as the number of children that were used to qualify. So once again, people should just take those letters, give them to your preparer, and let us deal with it. Earned income credit. So changes with this basically boil down to the IRS is making it easier and expanding some limits and thresholds so that more people qualify. Basically, they still realize that a lot of people are struggling out here because of the pandemic. So they want to make it easier for people to qualify. The big takeaways are that for 2021, if you did not have any children, the minimum age for you to qualify has been lowered to 19. It used to be higher, it was 24. And you can't be a dependent. So this is like for people that are filing on their own. The phase out percentages were increased for people with no children. And if you had investment income, your investment income limitation is increased as well. For tax, this is similar to tax year 2020, but it's a little bit different. For 2021 only, if your earned income for 2021 is less than the earned income from 2019, you can use your 2019 income on your 2021 return in order to qualify you for the credit. Sounds like a lot of numbers, right? Let me explain really simple. 2021, you didn't work, didn't have a job, couldn't get a job. 2019, you worked, you earned $7,000. Since the earned income credit is based off of your earned income, you can use the $7,000 to get you an earned income credit in 2021, despite the fact that you didn't work, okay? Easy peasy. Just realize either the software or we as preparers are going to make sure that that happens. We filed our first 2 tax returns of the season yesterday, and one of them is an EIC return. And per the IRS is not going to issue tax refunds for Form 1040 individual returns that include either the EIC or the advanced child tax credit before the middle of February, regardless of when they were filed. So this person filed yesterday. Their IRS is not processing this return until the middle of February, which means that these refunds likely will not arrive in bank accounts or on debit cards until the last week of February. The earned income credit is one where fraud can sometimes be carried out or conducted. People will manipulate income amounts or manipulate the number of dependents in order to get large refunds on tax returns. That's both from taxpayers and unscrupulous tax preparers doing dirtiness. So the IRS is hip to it and has said, yeah, well, guess what? We're going to check your kids. We're going to check the income. We're going to check all the documents before we issue the refund because we don't want to have to go and chase the money. So it's unfortunate, but just be advised, if you got an EIC or ACTC return, you're going to be delayed with that refund until potentially the last week of February. Dependent care credit. So layman's terms on this one, you have a child, you go to work, whether that's virtually or in an office, you pay for childcare, that you qualify for what is known as dependent care credit. The dependent care credit used to factor in $3,000 worth of expenses per child for 2 children. And depending on your income, you could either get 35% up to 20% in the form of a credit. Internally, we knew that the maximum credit you were going to get, you spend $3,000, you're going to get maximum $600 back. The key takeaway, if you look on the right-hand side, is that one qualifying child now you can get back up to $4,000, and 2 qualifying children up to $8,000. And the amount of the expenses that you pay for childcare have been increased to $8,000 for 1 child and $16,000 for 2. So once again, you can spend $8,000 on dependent care and potentially get 50% of that back as a credit, $4,000. spend $16,000 and potentially get $8,000 back. Okay. Charitable contributions. So effective for 2021, the tax returns we're filing now, you can give up to $300 worth of charitable qualified contributions in the form of cash if single, or $600 if married filing jointly, and receive a deduction for it. And you don't have to itemize. So traditionally, for most people prior to 2020, if you gave to charity, you had to itemize. And because of the increases in the standard deductions, a lot of people didn't. They no longer itemize. We used to itemize. We had a house, mortgage, interest, charitable contributions, all that good stuff. They increased the standard deduction to 24,000 or whatever. We no longer itemize because our itemized deductions didn't exceed the standard. So charities got really hurt because, let's be honest, sometimes people's decisions to do things are driven by a tax benefit. And people will say, hey, I'm not contributing to charity. I can't get a write-off for it, so I'm not going to. Well, in an effort to help charities, which do a lot of good, one charity that I particularly like is the Chicago Food Depository, because they really help a lot of people during the pandemic survive. I used to work in hospitality. I used to work for Hyatt, and a lot of hospitality workers who work on property, meaning your housekeepers and your janitorial staff, your engineers, bussers, bartenders. Hospitality was decimated during the pandemic. So if you couldn't work, a lot of people really depended on things like food pantries and soup kitchens and things to help them kind of make ends meet. And I just have a relationship with the Chicago Food Depository, and I really like what they do. So if you gave cash, it has to be cash, then, and you're not going to itemize, then you will be able to receive a deduction for it. $300 if you're single, $600 if you are married filing joint. Okay. And then for taxpayers who do itemize, the 60% AGI limit for cash contributions has been increased to 100%. So basically, you can deduct the full dollar amount of your charitable contributions without an AGI limit. That used to be in play a little while ago, a couple of years ago. I've been doing this for way too long. All right. Coronavirus distributions. So if a person took a distribution back in 2020 from a retirement account, so you took money out of your retirement account to help you survive, back then you could take up to $100,000, and you could either include it all in your income in that 1 year, pay the taxes on it, or you could spread it over 3 years. So you had to make the election. Well, for those who decided to not take it all at once and spread it over 3 years, you have to include that income, the third, you have to include it for 2020, 2021, and 2022. Okay. Now we have all of the prior history for those who this may apply to, and will include any needed income in 2021 tax returns. Okay. But just be aware that if somebody, they're going to need to include their amount of their distribution if they elected to spread it. Taxpayers can recontribute any portion of their distribution during the 3-year period, beginning basically after the day that they took the distribution, and basically pay it back, so that they don't have to pay the income tax on it or include it as income. But the key takeaway for here is that if someone took a COVID-19 or coronavirus distribution back in 2020 and elected to spread it, it's got to be included, and we're going to do that on our end. Educator expenses. So for all of our teachers out there, any elementary or secondary school teachers are allowed to deduct up to $250 of unreimbursed classroom expenses as an above the line deduction. And I know that many of the teachers who are on here are going to say, yeah, Jared, that's not new. People have been able to deduct the $250 of school supplies for quite some time. But the two things that would be important is, I'm going to jump, for expenses that were paid after March 12, 2020, aka when a lot of us had to go on lockdown. Educator expenses can also include the cost of PPE, disinfectant, and other supplies used for the prevention and the spread of COVID-19 in the classroom. So it's not just limited to like school supplies, but if you were using like sanitizing wipes, KN95 masks, anything like that to keep safe, you can deduct those as qualified educator expenses. And for those of you who teach in the state of Illinois, Illinois allows a double dip, so to speak, because they also allow you to deduct $250 worth of educator expenses at the state level. Now you may be going, why is this a double dip, Jared? Because Illinois and several states, we start with federal adjusted gross income as the starting point, and the deduction at the federal level for the educator expenses has already happened. So you get to deduct it there, lower your AGI, and then you get to go to the state and deduct it and reduce it again. But anyway, we always ask the question for any of our teachers, what school did you teach at, and did you pay any amounts for school supplies? So just feel free to pass this on for any other teachers that you know that are actively teaching. Okay, so that is the end of the tax update. Once again, you can go ahead and pop any questions that you might have into the chat. For anybody who joined later, just be advised we are muted all the lines and we've killed all the video for the presentation. So just go ahead, hover up or hover down, and you can type your information into the chat, and I will do my best to answer those questions towards the end. Now let's go into the final piece, which is just office protocol, how we're operating this year. So as we continue to battle COVID-19, we are going to encourage everyone to utilize the portal to submit their documentation. You can still mail us your information, fax the information, however you would like to get it to us. But basically, we are not trying to prep in office. So you can drop your documentation off to us, but we're not trying to do face-to-face prep as we try and keep everybody, safe and uninfected. Side note, if you all saw the video that I sent in January the 3rd, yes, unfortunately, I got COVID over Christmas while traveling to New York. I didn't get it in New York. I got it from my daughter because they had an outbreak before we left. We all tested negative that Monday and flew on Wednesday. And then that Thursday, she goes, my throat feels funny. And me being the dad, sleeping in the same room with her so that she wasn't afraid during quarantine, I caught it as well. Vaccination status aside or whatever, my symptoms, luckily our symptoms were mild. So, no major issues or anything like that. But we are trying to keep the office safe because nobody likes being sick. If discussion or review is needed for any return, we can set a person up with either a Zoom call or a conference. So once again, we're planning to limit the in-person to drop-off appointments only. But if you do not have the necessary technology or you absolutely need to come into the office to do a face-to-face, you are welcome to. You just simply need to call the office beforehand so that we can schedule accordingly, because we try and keep it so that if there is a person in the office, it's only one person at a time and that those appointments are spread out. Now, who do we have working for us this year? So if you call the office and a young lady answers and her name is Takira, that is our administrative assistant. So please treat her nice. I protect her. So anybody who doesn't treat her nice, I will not be too happy about that. But Takira makes sure that everything works. I know plenty of you all have already interacted with her via email or via phone. But if you have any questions with regards to, portal and password resets, doc submissions, any emails, any of that stuff, please feel free to utilize Takira. Anybody who's emailed me has probably noticed that there's this really random autoresponder that I have that says that I only check email between 2 and 3. Yeah, I only check email between 2 and 3. She handles everything. So if you absolutely need to have something done, call the office, or you can email us at clients@wilsonrogers.net. So I can drop that into the chat before we get out of here. But if you need to email us, email clients, because they monitor, meaning they staff, monitor the email box, whereas Jared is trying to stay out of my email because I get nothing done being in email all day. We have our intern with St. Xavier University, Ms. Mecca Falane. Toya Simmons is going to be our lead tax preparer this year. Toya is an enrolled agent, and she's been training and working for a couple of weeks now. So fingers crossed that, everybody's health stays good. But hopefully we've got the situation with regards to personnel kind of nailed down. And even if we were to have issues this year, I've got some backups. We're planning to have Mohammed Seth work as a tax reviewer so that all returns are reviewed. So whoever prepares the return, somebody else at a higher level is going to review that return. And Mohammed is going to function as me and help me out. And then Renee McNeil is our bookkeeper. So having somebody here so that all the books are not being done by Jared. For our bookkeeping clients, we're trying to work on, straightening that stuff out. We've got our package changes. So the newsletter that went out in January, no, not the newsletter. It was the email that I sent on January 3rd. If you go back to that, if you don't get it, you can just email me and I can resend it to you. We've noticed that people that have Gmail accounts, since we send out of a CRM system, it sometimes bounces and goes to junk mail, in particular Gmail. Gmail like screams really, really hard. So you may not have seen this, but we can easily email it to you. So we operate off of a package system. The big thing is the packages themselves have stayed the same, but the pricing changed. In the newsletter that I sent in January, we had kind of indicated that inflation through November of 2020 was running at about 6.8%. And as much as I would like to live in another universe or another planet, we are not immune to it either. So case in point, our internet and phone was running at like $330 a month. It's like $370 now. So unfortunately, we've got to index our prices. So standard package, if you just basically got a W-2, 1099, or unemployment compensation, taking the standard deduction is $230 to have that type of return done. Intermediate is for anybody who has minimal stock and dividends. And these packages include everything that's beneath them. Schedule C with less than $5,000 worth of income or expenses. Schedule E with a single rental property, or if you have the earned income, significant credits that are not the earned income credit, or if you're itemizing, that's going to put you on intermediate at 410. And then advanced is everything above that. So if you had more than one rental property, if you have a Schedule C with more than $5,000 worth of income, you're going to be 660 plus. Now, as I mentioned earlier, we offer various discounts. So if you start the filing process before a certain date, you will receive $50, $40, $30, or $20 off if you start before Valentine's Day, March 14th, March 31st, and April 18th. Okay. So what does starting mean? Starting means go and do the PDF version of your organizer, load it to the portal. Go and do the jot form version of the organizer, submit it. Load your documents. Now, the caveat is you can't load the jot form on like February the 3rd and then don't load your documents until like April the 18th. That's not going to count. All right. So it's got to be kind of close proximity. So if you load your organizer, say like on the 14th, and then February the 14th, and then you loaded your documents on the 18th, you're going to count for the biggest discount, which is going to be $50. Okay. We do have another discount. So if you earn less than $72,000, then you do qualify for what is known as IRS free file. There's a video, I did a video about that. We'll show you some of that stuff. I did a video on free file, but if you make less than $72,000, you can get your taxes done for free. But if you decided you wanted us to do it, then we give you a discount for that as well. All right, so that is packages and pricing. Real brief, extension surcharge pricing. We've tried to do this or implement this for 2 years running. And unfortunately, COVID and then operational issues just make it so that it doesn't happen. The key takeaway for this is that basically, if your return has to go on extension and then it gets drug out past June the 1st, you're losing discounts and we're going to increase the price on it. This comes down to the fact, real story, Jared does not want to be in Disneyland celebrating his daughter's birthday, and somebody tells me that they need to get a tax return done in 2 days because it's been on extension for 3 months. So if your return goes on extension and it's not done and wrapped up by the 1st, then we're going to rip out the discounts and you're going to end up paying a higher price for it. But delays caused by extenuating circumstances illnesses, people being incapacitated, etc., are going to be exempted, but that's at our sole discretion. So what you see on your screen is going to be our YouTube channel. So just wanted to highlight this real quick. We have started, as you can see right here, 100 days of tax tips. They're primarily being done on our TikTok channel. And when I go ahead and send out the webinar replay link a little later today, I'm going to include all of our social media platforms so that you can follow, if you do so choose, on the platform of choice. But as you can see down here, it's called 100 Days of Tax Tips. The hashtag is 100dot. And today's video is already going out. What is the fastest way to get my tax refund? We have, what is my filing status? Can I write off charity if I don't itemize? So we are giving you 100 days of tax tips. So feel free to go ahead and, you can follow it on YouTube. You can follow it on TikTok. And I'm just going to play you a snippet right quick.
Want to know 100 ways to have a smooth tax season and not give Uncle Sam all your money? Then join us for 100 days of tax tips. Hashtag 100dot. So each and every day, starting Sunday, January 9th, we're going to give you a tax tip video. It could be a tax deadline reminder. It could be a tax saving tip. It could just be me coming on and just giving some funny tax related humor. Who knows? But the one thing I do know is this: you don't want to miss out. So like, follow, subscribe, or just come back and check out the hashtag 100dot just to see what's going on. That way you don't miss a tax or money saving tip between January 9th and tax day, which is Monday, April 18th. Like, no, for real, it's like actually April 18th and not April 15th this year. So, hey, you don't want to forget that. All right, so until next time, 100dot. Hey, yo, is that it? Like, there's nothing else for me to do? I ain't never done one of these YouTube, TikTok, reel type things or whatever. Like, we don't say cut. All right, cool. 100dot.
So just sharing that with you all. But like I said, you can follow the playlist if you want, because we've got all the different videos. And yeah, so we're at 25, which means that we're 25% through. So lastly, my information, like I said, is on the screen. I'm going to leave this up for a quick second. Like I said, if you have questions, the quickest, easiest, best way to get them to someone is to go to clients@wilsonrogers.net. Take a picture on your smartphone right now, or take a screenshot, write it down. Like I said, I'll leave it up. But ultimately, over the course of time, because I've been doing this for quite a while, we've had this office since 2012, and we've been in business since 2005. One of the things that the pandemic highlighted, at least to me, and several businesses, is just that whatever your weaknesses were, they were simply amplified and magnified during the pandemic. And one of the weaknesses in this particular office is that a lot of stuff, quote unquote, ran through me, whether either through a review standpoint or a supervisorial standpoint or whatever it may be. And that's a hindrance. So prime example, a lot of clients over the years have gotten my email, and that's how we communicated with regards to various things. Yeah, well, when you got 300, 400 plus clients or whatever, and during tax season, everything is running into my email, and then I have to farm that out to someone else. It just doesn't make for the best client experience. So we set up clients@wilsonrogers.net. If you have a question and you are a current client, then you can just simply email it there. Secure can look at it, the preparers can look at it, and they can get it addressed. Telephone number is on the screen, and Twitter, Facebook, and our blog is there as well. I've put the email address into the chat bubble, and I've dropped in the link to our TikTok channel. If you are on TikTok, I'll make sure that all the social media links are in there as well. All right. Well, I appreciate you all taking the time to go ahead and join us. We are hoping for a smooth, uneventful, and very prosperous, tax season for everybody. If you have any questions, go ahead and feel free to, email us or give us a call. Like I said, the replay will be out a little bit later. And for everybody in the Chicagoland area, please stay warm, drive safe, take those shovels and phone chargers out in case you get stuck. All my East Coasters, yeah, I feel sorry you're going to get the snowstorm. So you all stay warm. And then for all my West Coasters, what time are we at? It's almost time for lunch. So, all right, guys, thanks very much. Enjoyed it. And I will talk to you all soon. Bye, everybody.